Euro dollar. So last week the euro triggered a key double bottom formation after taking out some neckline resistance at 110.53, and this opens the door for over the coming sessions towards a measured move objective at 115.35. Still, ultimately the broader downtrend remains firmly intact, and the market is expected to stall out somewhere ahead of 115.35 or around there in favor of the next major downside extension back below the recent 12-year low that we saw on the 13th of March at 104.62. To the downside on a short-term basis, a break back below 109.60 would be required to put the pressure back on the downside. Sterling dollar. So cable had a really nice recovery that extended last week all the way up towards 155, but the market stalled out just shy of 155 and shy of the 2005 high at 155.52. The latest sharp pullback puts the market back in the middle of a key range, and for now, we're going to need some additional clarity on the direction. A break back below recent lows that we saw around 150 would open the door for a resumption of declines, exposing those recent multi-year lows that we saw at 145.65, while a push back above the high that we saw on Friday, which comes in at 153.97, would open the door for a retest of the recent highs and a retest of the 2015 peak. Dollar yen. So dollar yen continues to show how well supported it is on dips, with the market once again trading down into the 118s, but bouncing rather quickly back above 120. At this point, there's no real clear directional bias on a short-term basis, with the market ultimately confined to a multi-month consolidation roughly between 118 and 122. But if you look at the broader structure here, going back several months, the uptrend is firmly intact, and therefore a break above 122 is favored towards the 125 to 130 area further up. Really, only a break back below 118.23 would delay, while only a close below or break below 115.55 would negate the current intense bullish structure for dollar yen. Euro Swiss. So Euro Swiss has entered recovery mode since bottoming out at 102.35 several days back, and the market looks like it's in the process of correcting, looking for the next higher low ahead of a fresh upside extension back above the recent highs that we saw around 105.25, and then eventually seen back towards 108.15 further up. At this point, only a break and close back below 102.35, those recent lows that we saw, would negate the recovery outlook for Euro Swiss. Aussie dollar. So Aussie dollar had a nice little rally in the previous week, though the rally stalled out convincingly after breaking up above 80, but stalling just over that previous critical support, now turned resistance at 80.33. The market was unable to establish a close above that psychological 80 barrier, and a lower top is now sought out at 80.75 ahead of the next major downside extension below the recent lows that we saw at 75.33. Really, only a break back above the high that we saw around 82.95 going back to the yearly high in January would compromise the bearish outlook. Dollar CAD. So after breaking down below 123.50, dollar CAD traded into a measured move objective of around in the 11900s ahead of this latest minor bounce. At this point, additional setbacks should be very well limited to the 119s, with a higher low sought out ahead of a bullish resumption, eventually back above 28.35 and towards the 2009 peak at 130.65 further up. Kiwi dollar. So Kiwi has been enjoying a bit of a correction over the past several weeks since bottoming out at 71.76, though the market is now trying to put in the next medium-term lower top somewhere ahead of 78 in favor of the next bearish downside extension below 71.76 and towards the 65 area further down. At this point, only back above 78.90 would compromise the bearish outlook. SPX 500. So the S&P 500, though trading just off recent record highs at 21.26, does continue to show signs of topping, with the market unable to really convincingly establish above that previous record high from February at 21.20. At this point, we need to see a break back below the recent weekly low that we saw last week at 20.76 to open the door for an acceleration of declines, exposing more critical support further down at 20.40. Inability to take out last week's low at 20.76 would keep the immediate pressure on the top side for a break above 21.26 to fresh record highs. Gold. So although gold saw a nice sharp pullback last week, taking it down below 1175, the market was unable to establish a daily close of below 1175, and this keeps the consolidation intact in favor of potential upside back towards recent highs at 1224. If we do see a close below 1175, however, that would put the immediate pressure back on the downside for a retest of that critical base in 2014 at 1131.